good day. Welcome to Tamara Live. Today I have a very special guest, Vimbai Nyakudya, CEO of ZIMPLOW Holdings. And we're basically going to discuss the company and where it's going, strategic direction, and basically just educate investors on what ZIMPLOW is all about. How are you doing today, sir?
Thank you, Cornelius. I'm glad to be here with you. I feel very fine.
Very good. Very happy to have you here.
Thank you.
So basically, just give us a background of the ZIMPLOW business model. What drives your company and what is your vision going forward?
Thank you, Cornelius. So ZIMPLOW is a listed entity. It's a diversified group where we supply equipment in the various segments of the economy, mainly agriculture, the mining and infrastructure sector, and now the automotive and logistics sector. We deal with various premium brands of equipment like Massey Ferguson, Scania. We had Caterpillar, and we are looking for a new OEM. We have got Perkins. We have got on the solar equipment side, we've got Long Eye. We have got the Victron energy side. We also have our own local brands in Millibrand and City Balls, which we have built through or built on from our manufacturing capabilities in Bulawayo.
All right, that's good. So you have a lot of distributorships with a number of well-known brands and everything. After the Caterpillar thing, I think it's important to talk about the risk that you could lose those brands and they could decide to just enter Zimbabwe by themselves. Do you have that risk with your other distributorships?
So it's when you're dealing with OEMs, major companies, they are always looking at their strategies. They are always looking at how they can evolve, serve the market better. And Caterpillar has been one of them, one of those brands that have been looking at how they can serve the market better. So the risk is always there, and we are aware of that risk. And as a group, we have been working closely. Obviously, the first thing is that we have to engage our distributors or the owners of these distributorships to understand their strategy, where they are going, and how we can work together to deliver a solution to our customers. So on an annual basis, we do engage, understand the strategies, review the performance that we would have put through, and how we can be better, work together going forward. So we are constantly also on our side looking into the markets and options that are available to ensure in case that there are changes, we will never be found wanting. So that's the nature of the game. And with our business model, the thing that builds ZIMPLOW, or the thing that makes up ZIMPLOW, it's our expertise, the staff, the people, the experience in the sectors that we operate. Secondly is the infrastructure. This whole complex here, we have got warehouses of parts and equipment. We have got workshops with some of the state-of-the-art equipment. And we have got branches almost in every mining town in Zimbabwe and every agricultural town in Zimbabwe. Thirdly, we have got a balance sheet which we have sought to maintain over time, or we have built it up to a stage where we are happy with our financial capabilities. So those three components, together with our brands, they make up ZIMPLOW. So these three components are ours. The brands come from the OEMs or the suppliers. So we can easily plug in a brand when need be within our structure, within our business model.
All right. So what percentage of your totally manufactured equipment would you say you guys contribute to, and which other part is made up by other brands and distributors?
So Millibrand is our biggest contributor from a manufacturing perspective. And this business, it is called ZIMPLOW. It came from the Millibrand factory. And over time, obviously, because we've brought in a number of brands, a number of businesses to the group, now Millibrand contributes about 25% of the total turnover of the group.
Okay.
And that's our own manufacturing capacity. 75%, the other 75% come from the different brands through Massificus, Scania, Goodyear, Perkins, and so forth.
Okay. So it's a very capital intensive business, and we know we're struggling with foreign exchange and getting hard currency on the auction system. How are you guys getting that hard currency through exports? Through that, what's the outlook for?
So we have been a business that have been operating in Zimbabwe for quite some time. I mean, just like another business, we have learned to survive and to live with the constraints that we face on a daily basis. So the efforts by the government, I have to acknowledge the auction market or the auction system. It has worked to a certain extent, and we have been a beneficiary of that. 2021 was a good year for us, mostly because of the stability that we obtained on the foreign currency market front. This year, we have seen, or the beginning of this year, or towards the end of last year up to this year, we have seen some delays in the release of funds from the auction market. And we as a business, we have been engaging from the RBZ governor right through to the different banks that we deal with. And we've been seeking options in which we can navigate this foreign currency front. We have set up LC structures. We have worked with our different partners, our different banks to put in foreign currency support structures so that we can access the legal foreign currency that is in the market. We have also relied on our customers as much as we are trading in ZWL. Our customers have been able to access foreign currency receipts because we deal with exporters, we deal with mines, we deal with tobacco customers. So we have been able to put up structures that would afford us access to foreign currency. Over and above that, we are an exporter through Middle Grant. And that generation of foreign currency from an export perspective has been quite vital, especially now between March and April, where we have seen our export sales growing, and we've been able to access the foreign currency.
Okay.
Then the last bit obviously is the access to the ecosystem of customers that have access to cash, and they've been bringing that cash over to us, over our counters, over our various distribution points. So I think to a certain extent we've managed to survive.
Okay. So I like to look at a company from a top-down perspective.
Yes.
So because a company can't operate, it's nothing without a conducive environment.
100%.
So of course we have inflationary pressures. So you need to localize as many of your USD sales as possible. Yeah, your customers are mainly agriculture.
Yes.
Are they receiving much USD? I know the government is buying mainly from them in ZWL. So your clientele, I don't know if they're able to access USD to the amount that you require. And also with exports, you have to surrender 40%.
Yes.
So there's also
There are quite a number of dynamics that are happening or that are operating, that are affecting our trading environment.
Yeah.
With our customers, especially in the agricultural sector, obviously you have to look at the different segments that they are operating in, or the different crops that they're doing. We have got the tobacco customers. Lately, we've been in tobacco selling season. And they are mostly foreign currency generators. Yes, they've got that liquidation of about 25%. Yes. So that was a good initiative by the central bank to increase the foreign currency retention by the tobacco growers. And it has helped in a way. We have seen guys being able to pay us in foreign currency. We have been able to trade as a result. We then look at companies or people that have been growing the soya, the other crops for private contractors. Those guys have been able to access real money. So to a certain extent, that has helped commercial agriculture in Zimbabwe. And as a supporter of commercial agriculture, we have benefited out of that ecosystem. Yes, there is that ZWO payment that is coming from the GMB. Yes, to a certain extent, we have been able to service some customers in ZWO. But also the other thing which the GMB has done was to give a cushion in US dollars to the grain growers. So in that instance, there has been circulation of foreign currency that has sustained both the commercial farmers and our businesses. It's unfortunate on the lower end of the market, if you are looking at the agricultural end, with Millibrand, where there's been some slowdown in demand as a result of these current instabilities.
Yeah, and you see a lot of them deciding to go for side marketing instead of taking the grain to GMB.
It becomes an issue, but from our end, it's not really going to be our issue because at the end of the day, if they can
get the USD
100%. But from a government perspective, obviously, it's an issue that they will need to look at, and we are always providing any necessary support to the government if need be.
Okay. Yeah. And last year you carried out a few acquisitions, Scania, and a few others, Tradeco, Trenta, Birmingham Properties. How does that fit into your diversification strategy and also possible synergies going forward?
So if you look at ZIMPLOW, like I've indicated, yes, we operate through various business units. If you look at it with maybe Basel looking at the earth-moving equipment, mining equipment, infrastructure or construction equipment, then you look at farming agriculture, Scanlink, the newly acquired business, going into the logistics, you may think that there is some madness, kind of. But if you understand the business model, you will see that there are certain similarities, there are certain uniform, there's a uniform model that we are working on. Number one, we supply equipment, and we rely on our technical capabilities to service that equipment. Mostly the equipment that we supply, it's driven by diesel engines. And therefore the diesel engine, whether it's on a truck, whether it's on a tractor, or whether it's on a earth-moving equipment, it's more or less the same. So we can leverage on those capabilities. Secondly, if you look at the sectors that we service, we talk about agriculture, mining and infrastructure, and the logistics and automotive. The logistics and automotive, that cluster or that sector services the mining and agriculture, which are the backbone of our economy. So in a way, we are saying these two clusters or sectors, the agriculture and the mining and infrastructure sector, they sort of like form the basis of our business. And therefore, anything that will enable us to support these sectors, we would definitely look at it, as long as the model, we sell equipment, parts, and service, as long as the model fits along those lines. So that's how we have been looking at it. And if you look at Birmingham investments and the other property, like I said, there are three things that ZIMPLOW owns, which is the infrastructure, the people, the skill, and the balance sheet. So the properties, they offer us the infrastructure, they offer us a balance sheet. Like you rightfully put, we are into capital equipment. With capital equipment, you always need financing capabilities, and the infrastructure provides us with the security to access or to be able to offer financing capabilities. So that's one of the things that we were looking at when we looked at this acquisition. Over and above that, you will see that the opportunities that, for instance, Trenta offers, it's that direct engagement with with the supplier on the aftermarket solutions. We provide services. We provide aftermarket solutions like we sell over-the-counter oils. We sell over-the-counter batteries. And we have been going through certain suppliers who are mostly middlemen. But if we can go directly to the OEM, it cuts the cost. It better positions ZIMPLOW to service the customer. So that's the way we are looking at our business, and we'll continue to look at the business in that manner.
All right, but what if you locally manufactured all that equipment instead of relying on distributorships? Wouldn't that cut the costs because you're mainly operating on ZWL cost base rather than demand currently?
So we look at it from a comparative advantage perspective.
Okay.
One thing that we manufacture are the plows. If you look at the history, we probably are the biggest manufacturer of plows in the southern region, Southern African region. And because we had that first advantage, we have been able to improve on the cost efficiency through our factory. And we have been able to compete even in the region. I mean, you talk about the influx of the Indian plows, the Chinese products, and our factory is still standing strong. So it is as a result of us over time improving the processes and building capacity. So now, if we were to look at new products to manufacture, one thing is, what is it that will give us that competitive advantage? So it's a matter of us digging through the value chain to see what offers us that competitive advantage. If you look at rubber or the tires, it's not necessarily that we'll be able to have the infrastructure to support the value chain if we were to manufacture or to do production here.
Okay.
So those are some of the factors that we've been considering.
Right. And on the topic of infrastructure, we know it's electioneering season. There's a lot of investment in infrastructure from government.
100%.
Are you guys benefiting a lot from that? It's going to increase volumes going forward?
100%. So we have benefited quite significantly, I mean, especially with Basel. So last year, 2021, we sold a record number of units into the construction sector. There are quite a number of contractors that have been looking to capacitate themselves. And luckily, or fortunately, most businesses in Zimbabwe, they are now looking at a long-term business model. They are no longer just looking at the short-term opportunities. So that gives premium brands like the ones we offer a chance, because premium brands, we are looking at a lower cost of ownership over a lifetime, over a longer period of time. So most of the corporatized contractors, they've been going for our product.
Okay.
So that has been good for us to a large extent. Even on the after-sales perspective or aftermarket solutions, we have been able to provide the tires, we have been able to provide the fasteners, we've been able to provide the oils and other complementary products that these contractors need to deliver value.
Okay. And what payment terms do you allow your customers to have? I know you used a lot of the prepayments in the past. Is that still something you're... because profit is nice, but cash.
So in the environment that we are in now, I think you would reckon that with the volatility, you will need to be more or less focused on value preservation. You will need to be more or less focused on cash. And that's how we have been working through the different equipment source, equipment structures. Yes, we have been trying to find tailor-made solutions, like providing leasing options, rental options, so that the equipment will remain ours, whereas the customer gets to utilize the equipment. If they fail to pay the monthly leasing options, then we take that piece of equipment. So that will offer them capacity at a lower initial cost of purchase.
Okay.
So
Right.
yeah, so that has been the nature. Yes, there are certain instances where we look at financing packages or giving equipment or after sales products on credit. So it's been on a case by case kind of perspective. But our business, we are focused on cash. Cash is key.
Cash is king. Cash is king. Okay. And with those leasing arrangements, is that your main avenue of revenue recognition, or you prefer to do outright sales?
We prefer to do outright sales.
Okay.
And the best part about Zim is that most of our customers prefer to own their means of product.
Tangibility.
Yes. So everyone wants to hold value, and they want to hold value in some real asset, and equipment is one asset or is one option that our customers have to hold the value.
All right. And I know interest rates increased from 80% to 200% recently. How exposed are you guys to loans, and will this affect you going forward in terms of your cost base?
So it does affect us. We have relied on borrowings for the purposes of extending the same to our customers. We believe, like I've indicated, we have got capacity through the strength of our balance sheet to access funding and then leverage on that to extend to our customers. So with this increase in rates, in interest rates, it has sort of like restricted our capacity to extend the similar facilities that we have obtained, or that we have generally obtained from the banks for onward lending to our customers, or for onward supply to our customers.
Okay.
So we, like the previous question you've asked, we have had to hold back on the extension of credit facilities to our suppliers, to our customers. But for ZIMPLOW, for the group, we are on a strong balance sheet.
Okay.
We have, and will continue to rely on our own internal resources to support our customers.
All right. And the regional expansion, is there anything there?
Yes, as a group, we are focused on growth. We have worked on ourselves for some time. We have focused on the local market to a certain extent, and we believe we are at the peak of that growth. And when you are looking at growth, you either look at diversifying in terms of the product range, or diversifying in terms of the markets that we operate. And we believe we're at that stage where we need to look at opportunities in the region, where we can diversify from a market perspective. Already we've been in the region through the export of plows. We have mostly supplied Zambia, Angola, South Africa, Botswana, and Namibia.
Okay.
So yeah, we are focused on growth.
Okay. And what are your export strategies in those markets? In your recent results, you had lost some ground in Zambia, also Angola, and Mozambique.
Yes. So if you look at Angola, Mozambique, these markets have been facing their own challenges, and therefore there's been a slowdown in terms of uptake of our products. It's not like they are taking alternative products, but there's just been a slowdown in the uptake. And once these economies start to pump again, I believe there is scope for our products to be taken at much better volumes.
Okay. And I really admire the diversification drive. So now you're in mining, you're agriculture, and now logistics. Is there any other sector that we can expect ZIMPLOW to enter?
For now, I think we will concentrate on that. So our business, or the way we are looking ahead, We are about equipment, and anything that supports our after-sales solution, because after-sales or the aftermarket or the after-sales side is where we get most of our profits, is where we get to expand our margins. So any product that will support, just like what happened with Goodyear with the train tire, it's the tires, they support our equipment. If there's an opportunity to get a business that supports our equipment, we will definitely consider that.
Okay.
And we will continue to support the income markets in agriculture, mining infrastructure, and the automotive and logistics sector.
Okay, then final question. I haven't spoken about competitors. So I've seen a lot of JCB equipment around. I think those are arguably your biggest competitors in terms of the earth moving, mining and agricultural sectors.
100%.
What are you doing to sort of fend off the competition?
So maybe if I can put it in this manner. So you reckon that we have been announcing or been communicating to our investors and our market that Caterpillar will exit the group, or we will no longer be servicing or supplying Caterpillar products. We are looking into new earth moving equipment products or brands, and we have got a number of candidates that we have lined up, or a number of suppliers that we have lined up. Obviously, with the infrastructure capabilities that we have got, with the access that we have got to relationships, the market, we offer a compelling proposition to any moving equipment, OEM. And from that perspective, because we have been supplying the highest end or the extreme end of the market, we are now looking to position ourselves in a much more competitive space, where we can be able to provide that customer who was price conscious with a premium product at a very competitive pricing. Obviously, we've got the expertise. We have got we can provide the reliability for any premium brand on that basis. So our brand promise, we have always been about lowering the cost of ownership of equipment that we supply. So it is still that commitment that we are offering with any new earth moving equipment OEM that we supply, and we will continue to defend that lower cost of ownership position.
Okay. Thank you so much, Mr. Nyakudya.
Thank you.
Lots of information to digest, and I hope this has been very educational for those that are watching. And I'm sure we'll do many more interviews in the future. Thank you for coming.
Thank you very much. I appreciate the opportunity.